Hi there, this is Santian. Today we're talking about a cloud company that has become extremely volatile recently. Due to the pandemic, many companies started to adopt the use of technology in helping them to survive past this pandemic. Hence, if you feel that technology companies could continue to attract attention, the stock price will increase. The company that I'm talking about is Salesforce. In today's video, we'll be talking about how Salesforce is going to help companies enter the digital world. Before we continue, please smash the like button. And if you'd like to see more of such videos, please subscribe to this channel. Firstly, we'll be talking about the business model of the company. Salesforce is an American cloud-based software company headquartered in San Francisco, California. It provides customer relation management service and also provides a complementary suites of enterprise applications focused on customer service, marketing automation, analytics, and applicable development. In 2020, Fortune magazine ranked Salesforce as number 6 on its list 100 best companies to work for, based on an employee survey of satisfaction. Secondly, we will be talking about a deal between Slack and Salesforce. Salesforce is making the biggest acquisition in its 21-year history. The company announced last year that it is buying chat software developer Slack for over $27 billion. Through a combination of cash and stock, Salesforce is purchasing Slack for $26.79 a share and 0.0776 shares of Salesforce, according to a statement. That comes to around $45.86 a share. Before initial reports of a deal, which led to a 38% pop in Slack shares, the stock was trading at under $30. The purchase marks one of the largest ever for the software industry. The biggest was IBM's $34 billion purchase of Red Hat in 2018, followed by Microsoft's $27 billion acquisition of LinkedIn in 2016. Last year, the London Stock Exchange agreed to buy data provider Refinitiv for $27 billion, though the deal has yet to be cleared by European regulators. For Salesforce, the Slack deal is the latest in CEO Mark Benioff's multi-year acquisition spree. The company spent $15.3 billion on data visualization company debut in 2019, and a year earlier shelled out $6.5 billion to acquire MuleSoft, whose back-end software connects data storage in display places. Salesforce, which got its start by developing cloud-based software for sales web, has dramatically expanded its reach in recent years, and along the way becomes one of the most valuable software companies in the world, passing Oracle, SAP, and IBM, as well as other legacy tech companies such as Cisco and Intel. By acquiring Slack, a business chat service with over 130,000 paid customers, Salesforce is bolstering its portfolio of enterprise applications and filling out its broader software suites as it seeks new areas of growth. The acquisition will further intensify Salesforce's rivalry with Microsoft, whose Teams chat and video service has emerged as Slack's stiffest competitor. Next, we will be talking about the scrutiny in this deal between Slack and Salesforce. The US Justice Department Antitrust Division has asked Salesforce and Slack for more information ahead of Salesforce's plan to buy the smaller software company for $27 billion, Salesforce said last month. Even with the additional layer of evaluation, Salesforce still expects to close its deal in the quarter that ends on July 31st, according to a regulatory filing. The review, known as a second request, is not unprecedented. GE 2017 Barker Hood's acquisition Charles Schwab's 2020 TD America trade deal, and Anheuser-Busch's 2020 transition with Craft Beer Alliance, which involved the sales of Colonel Bearing Hawaii operation to another company, also faced similar requests. There are signs that the US might take a stronger approach to antitrust enforcement than it did under Barack Obama, CNBC reported in January. In Congress, Amy Chapter, a Democrat from Washington, who became chair of the Senate Judiciary Subcommittee on Antitrust this month, had proposed a sweeping reform of antitrust enforcement. The proposed deal, which will be Salesforce's largest to date, will unite two companies that both seek to challenge Microsoft, the world's largest software company. Next, we'll be talking about the company's earnings performance. Salesforce shares fell as much as 4% in external trading last month after the enterprise software company issued earnings that exceeds analyst estimates, but came out short on its full year earnings forecast, as it factors in the implication of buying team communication app Slack. Salesforce reported 20% year-over-year revenue growth in the fourth quarter of the company's 2021 fiscal year, which ends on January 31st, according to a statement. In the previous quarter, revenue grew by 20%. While revenue guidance for the full 2022 fiscal year surpassed estimates, earnings guidance was soft for the full year, which will include the impact from Slack. The company called for a $3.89 to a $3.41 in adjusted earnings per share on $25.65 to $25.75 billion in revenue. That includes a $600 million in revenue from Slack. Separately, Slack said its preliminary revenue of $902.6 million in the earnings that ended on January 31st was up by 43%. Analysts provide with this has been expecting $3.49 in adjusted earnings per share and $25.42 billion in revenue. In the quarter, as the pandemic continues, Salesforce had $184 million in expense because of adding certain real estate lease, more than the $80 million to $100 million range Salesforce has expected. During the quarter, we identified further opportunities to consolidate and sublease across our global portfolio, including in some of our hub locations, Weaver said. Finally, we were talking about Salesforce becoming Silicon's best late-stage tech investors. Last week, Salesforce reported a $2.17 billion annual gain from its investment in other tech companies. A few days later, the company's venture arm extended its winning streak with another big exit. In a boom time for large tech IPOs and software consolidation, Salesforce's name is showing up everywhere. CEO Mark Benioff has proven that he is not only a mega dealmaker when it comes to buying high-priced cloud companies, but also turned Salesforce, with its hefty balance sheet, into a major force in Silicon Valley's venture capital. The latest windfall came on last Wednesday when cloud security vendor Okta said it acquired small rival Auth0 for $6.5 billion, 8 months after Salesforce Ventures led a $120 million investment at a $1.92 million valuation. Salesforce more than tripled its money between July and March. Given how good the CEO is in picking up investment for his company, there is a high chance that the company could be even great investors in Silicon Valley. conclusion, I strongly believe that Salesforce is a great company. However, due to the current stock market environment, it is very hard to see investors moving from the real burning stocks into this growth stock. Unless there's a change in how investors view the bond market, the company stock will continue to suffer. With that, take it, have a nice day. Goodbye.